past week in the global markets has been one of stock volatility and strategic revaluation by the investors worldwide, which was mostly driven by US administration's policy decisions. Here is a comprehensive look at the key events and their implications. First and foremost, the escalating trade tensions. President Trump's continued push on the tariffs and restrictive immigration policies have sparked a significant reassessment of the US as a stable destination for the global capital. Large institutional investors, including some of the world's biggest pension funds, are pausing or reassessing their investments in the US private markets. Some of the examples are the Canadian Pension Plan Investment Board and Denmark's major retirement funds, which are delaying further investments due to the geopolitical instability and the potential tax implications. Second, the market whiplash. Equity, bond, and commodity markets experienced dramatic fluctuations. The S&P 500 briefly entered the bear market territory, and there was an unprecedented sell-off in the US Treasuries, challenging their status as a global safe haven. This shift was accompanied by the rising yields and contradicting the usual trend wherein bond prices rise when stocks fall, signaling a potential regime change in the global fixed income markets. Then we also have the gold surge. Now, as confidence in traditional havens like the US Treasuries waned, investors turned to gold, which saw its best week in 5 years. The precious metals price soared to new highs, driven by a weaker US dollar and heightened concerns of a systematic risk, marking a significant shift in the safe haven asset preferences. Next comes the corporate and the government bonds under pressure. The unwinding of the leveraged positions in the bond market added to the turmoil, with hints that the foreign holders, particularly from China and Japan, are reducing their exposure to the US debt. This movement underscores growing global apprehension about the stability of the US financial system under the current trade policies. Finally, we have the strategic shifts in the investment. The week also saw a slowdown in inflows to the major asset managers like BlackRock, indicating a broader hesitancy amongst the investors. Anxiety dominated client conversations, pointing to a weakening US economy and a re-evaluation of the dollar's role in the global financial market. This past week may well be the turning point, highlighting the fragility of the US assets in the face of political and economic uncertainty. As global markets readjust to these new dynamics, investors are urged to consider more diversified and resilient strategies in anticipation of the continued volatility. This is what we wanted to share with you in this video. For more detailed analysis and future updates, do stay tuned in for more. Thank you.